Pay for Performance Incentive Rewards, Chapter 10, Mgmt2115 by Constance Barkhouse. Requirements for a successful incentive plan. For an incentive plan to succeed, employees must believe in it. There are 4 characteristics of a successful incentive plan. First, you'll want to identify important organizational metrics that encourage employee behaviors. Next, you'll want to involve employees. Incentive programs should seem fair. Next, you need to find the right incentive payout. Payout formulas should be simple and understandable. Last, you'll want to establish a clear link between performance and payout. Strategic reason for incentive plans. What is variable pay? A major element of strategic compensation management is the use of incentive plans, also called variable pay programs. Variable pay programs consist of bonuses, incentives, or recognition of good work. Administering incentive plans. While incentive plans based on productivity can reduce direct labor costs, to achieve their full benefit, they must be carefully thought out, implemented, and maintained. Allowing incentive payments to become pay guarantees defeats the motivational intent of the incentive. Annual salary budgets must be large enough to reward and reinforce exceptional performance. The overhead costs associated with plan implementation and administration must be determined. What is an individual incentive plan? Flexibility best describes the design of individual incentive plans. For example, technology, job tasks and duties, and organizational goals impact the organization's choice of incentive pay programs. Individual types of incentive plans. Piecework is when employees receive a certain rate for each unit produced. One disadvantage of piecework is that it may not always be an effective motivator. Standard hour plan sets incentives rates on the basis of predetermined standard time for completing a job. Bonuses are given to employees beyond their normal base wage. They are frequently given at the end of the year and is not part of their base pay. Merit pay links an increase in base pay to how successfully an employee performs his or her job. Once given, these are part of base pay. Incentive awards and recognition are used to recognize productivity gains, special contributions or achievements, and service to organizations. Sale incentives provide a source of motivation that will elicit cooperation and trust. Next, we will talk about group incentive plans. We have team compensation plans, Scanlon plans, and ImproShare. Team incentive plans reward team members with an incentive reward when agreed on performance standards are met or exceeded. When team compensation is decided upon, organizations typically use a 3-step approach to establish team incentive payments. What is the 3-step approach? The 3-step approach starts with setting performance measures upon which incentive payments are based. Second, the size of the incentive bonus must be determined. Third, a payout formula is established and fully explained to the employees. The Scanlon plan is a bonus incentive plan using employee and management committees to gain cost reduction improvements. ImproShare is otherwise known as Improved Productivity Through Sharing. It's a program under which bonuses are based on the overall productivity of the work team. Moving on are the enterprise incentive plans. The enterprise incentive plans include profit sharing, stock options, and employee stock ownership plans. Profit sharing plans is any procedure by which an employer pays or makes available to all regular employees special current or deferred sums based on the organization's profits. Stock option programs are sometimes implemented as part of the employee benefit plan or as part of a corporate cultural linking employee effort to stock performance. Employee stock ownership plans is an employer established trust that qualifies as a tax-exempt employee trust under Section 401A of an Internal Revenue Code. Next, we will discuss several types of long-term incentive plans. Stock options are rights granted to the executive to purchase shares of their organization's stock at an established price for a fixed period of time. Stock appreciation rights is cash or stock award determined by increase in stock price during any time chosen by the executive in an option period. Stock purchase is the opportunities for executives to purchase shares of their organization's stock valued at a full market or a discount price. Phantom stock is a grant of unit equal in value to the fair market value or book value of the share of stock. Restricted stock is the grant of stock or stock unit at a reduced price with the condition that the stock not be transferred or sold. In this chapter, we discussed incentive plans in terms of the objectives they hope to achieve and the various factors that may affect their success.